Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Easton Jr.
Welcome back to the Ask Ralph Show. Let's take a look in our Ask Ralph mailbag. Just remember, you can submit your questions to Ask Ralph by sending an email to ralph@askralph.com. That's Ralph, R-A-L-P-H, at askralph.com. The first question comes from Lloyd in Hockessin. He says, I noticed that my paycheck this week is about $24 higher than normal. I know I didn't receive a raise and have not changed my deductions. Do you have any idea what could have caused this? Well, Lloyd, that's a great question, and I have a very simple answer. The answer is that the recently passed Tax Act decreased personal income taxes. So what you're experiencing, and you've probably heard a little bit about this in the press, is there was a change to the tax withholding tables. So what they've effectively done is they've given you more money because they're reducing the amount of the tax they're withholding. Now, one of the things you want to keep in mind is take a look at your pay stubs and compare your federal withholding from one period to the other and make sure that's what we're talking about. You also need to realize that if you're getting that money now, you're not going to get a bigger refund at tax time. I know you've heard a lot about this in the press, but just be prepared that if you get it now, you're not going to get it later. The next question comes from Isa from Middletown. She writes, my husband and I just purchased our first home, and everyone has been telling us how much we will save on our taxes. But I've been working on our taxes online, and it doesn't seem to help much. Am I missing something? Well, Isa, that's a very good question. And it really depends on how many payments you made last year on your mortgage. Basically, the way it works is you're able to deduct the interest that you pay on your mortgage. So if you settled early in the year, you may have had 10 or 11 or possibly even 12 payments, which means you'd have the maximum amount of mortgage interest. But if you settled later in the year, maybe November or December, you may not even have had a payment at all. Now, one of the things you want to take into consideration is make sure you look at your closing statement from your purchase and make sure you've deducted all the things that are relevant on your purchasing statement. This is where it really comes in handy to have a tax preparer and accountant review this. I know personally in my practice, we get a lot of calls from people who have bought a home. The thing you need to realize is that the new tax law is going to impact this as well. What am I talking about there? Well, with the new tax law, if you're going to be doing married filing joint, your standard deduction is going to jump from $12,000 to $24,000. So the benefit of having a mortgage interest and property taxes may go away, but this is going to be dependent on everybody's individual circumstances. Our next question comes from Henry, who lives in Odessa. He writes, I live in Delaware but started a job in Pennsylvania last year. My employer is withholding PA taxes but not Delaware. How will this impact my tax return? Well, Henry, I get this question quite a bit as well. And it is a little complicated, but it doesn't have to be. Basically, the way it works is you have to pay taxes in the state that you work as well as the state in which you live. So what you've told me here is that you're working in Pennsylvania, but you're living in Delaware. So what you're going to do, and since your employer is withholding Pennsylvania tax, you're going to file a Pennsylvania income tax return. And you probably will break even there because Pennsylvania is a flat tax state. And then you'll need to file a Delaware tax return. Now, the trick to this is you're going to get a credit on your Delaware tax return for the taxes you paid in Pennsylvania. Now, one of the things I will tell you, having some experience in this area, is it doesn't always balance out. And that's because Pennsylvania's flat tax may be less than the Delaware income tax. So you're going to take a look at this. And I've had several clients over the years who we've actually had to set up estimated tax payments for so they don't owe money at the end of the year. But that's a great question, Henry. The next question comes from Melanie from Claymont. She writes, I just got married in December of 2017, and my husband is telling me that we have to file a tax return together, but I'm not sure that is correct since we were only married a few days in 2017. Is he correct? Well, it doesn't sound like matrimony's off to a good start if we're already arguing about taxes. No, I'm just kidding about that. But seriously, the way that this works, and this comes to a surprise, comes as a surprise to some people, but basically whatever you were on the last day of the year is what you're considered for the whole year. So in this particular case, Melanie, you're telling me that you were married in December of 2017, so you would be considered married for the entire year. Now, so you basically have two options. You can file a tax return as married filing joint, or you can do married filing separate. And this is something you have to take a look at and see which works best for you. You didn't ask this question, but this goes along the same way of people who are looking at divorce. So divorce would work the exact same way. So, you could potentially be married for the entire year and have your withholding set up, married filing joint. But if your divorce is granted before the end of the year, you could find yourself in a tax predicament, because you would basically have a couple options at that point to either file single, or if you have dependent children, maybe head a household. But great question there. Our next question comes from Dan from Newark. Dan writes, I need to have some major dental work done, and the dentist tells me that it will cost about $10,000. She also told me that I should check with my accountant to see if I could possibly deduct any of these costs. Well, Dan, I've got good news and bad news for you here. The basic answer is yes. This is a deductible expense because it is a necessary medical or dental expense. The problem you run into is there's also some limitations here. The first of which, and this is going to change a little bit going into 2018, but the first is a 10% of income limitation. Well, what am I talking about there? So let's say, Dan, that your total income for the year is $50,000. Well, you wouldn't be able to deduct any of these medical expenses until you reach 10% of that, or $5,000. The other part of this is, are you going to be able to itemize? Now, this year, with the itemized deductions not being double what they're going to be next year, you may be able to. Now, one of the things that we tell a lot of clients to consider when they're looking at medical or dental expenses is what's called bundling. And if you've got a lot of medical work to have done, if you get it all done in 1 year, or at least pay for it all in 1 year, then you could potentially add those things up and potentially get over that 10% limitation. The next question comes from Brenda in Smyrna. I just started paying my student loans back, and I thought I heard that the interest I pay is a tax deduction. Is that true? Well, Brenda, the answer is yes. And you'll receive a form from the company that you pay that interest to, and you will be able to deduct that up to certain limits. Our next question comes from Randy, who writes to us from Dover. My mother just died last year in June, and I have been receiving tax documents for her, but I'm not sure what I'm supposed to do since she usually handles this herself. What do I need to worry about, and who can help me? Well, first of all, Randy, I'm sorry about your loss, and this does present some very common concerns. The first thing is, your mom will need to file a personal income tax return for the period in which she was alive. So you said she died last year. Let's just assume she died in June. Then she would have a personal income tax return, or a 1040, from January through June. Now, assuming that she left something and the money was put into an estate, she may very well have an estate tax return if she earned any income in the estate from the day she passed to the end of the year. What I recommend here is to work with an accountant and work with an attorney to really put this together to make sure you've handled all of this in a professional way. I don't know who the executor of the estate is, but you want to make sure that you take a look at this and assemble all the documents, and I really highly recommend, finding someone to get some assistance. These are all great questions, and I do encourage everyone to write to us at Ralph@AskRalph.com and let us answer your questions for you.
You've been listening to Ask Ralph, brought to you by Sazio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Sagio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.